Welcome everyone to the Euro Trade. I have Paul H here with me today, and we're going to be looking at some charts, doing a little bit of banter. Anyway, Paul, it's been a while. How are you?
I'm all right. I'm good actually. Yeah, we've moved house, the same as you guys, and
Yeah.
so that takes your mind off everything for a while.
Oh yeah.
We have a lot to deal with. But yeah, it's really good. The August is drying up for gold. But other than that, well, I say that that's a broad statement, isn't it? It's not like that really. It's just that I've been doing really, really well with gold, and I've been exclusively in gold for about 5 weeks, 6 weeks, and then the last couple of days, it's just sort of not really played ball, and so I'm now cutting my size back down again, and so I'm going through that. It's like right, okay, I'll just be on small size for a little while longer, and it's fine. It's the summer, right? That's what
It's
happens.
the summer. Yeah, August
It's what happens.
traditionally is probably one of the worst times of the year, and usually second part of July can be so and so. But if you look at many years, it's still a quieter period. Obviously, we've had some tape bombs because of tariffs and Russia and Ukraine news, and that kind of brings a little bit of oomph into the price action. But other than that, especially certain commodities, they just go a little bit dead, and sizing down and making sure that you're not that you're basically surviving the summer. That's kind of the name of the game. Yeah. All
Exactly.
right, so talk to us about this trade. We were talking about it in the green room a little while ago. So a little bit of a boo-boo there, nothing too bad, but yeah, let's
No,
uh, let's
it
tell
was doing.
chat.
Yeah, it was doing really well.
Yeah,
And then I had to step away from the machine. I had a stop in, right? So
yeah,
so it triggered my stop, and that was that. But I was up 240 something with just 2 micros, because as I said,
yeah,
it's sizing down at this point. So I was up 240, so over 100 ticks, I think.
yeah,
Um, and I thought, right, this is great. What I also didn't have to hand, but I do now, is I didn't realise that we were coming up against core resistance,
yeah.
and the core resistance I've got at on Memphis Q, it says something like, what is that? 34. Let me just get that number. 34.75. I think they've got
Mm-hmm.
core resistance at on
That's
my
right.
trading chart. And so
Yeah,
we were very close to that, right? We got to 70, I think. It looks like that. Yeah, 70. So within 5 points of core resistance, and it seems to have rejected for now. But we've been looking at in on the buzzer. If it's all right with you, I'll just switch over to Trader View. I'll try and drag this across, and hopefully
yeah,
everyone can see this. So on at the buzzer, this is a daily chart. We drew these trend lines, and
yeah.
we've all been kind of following those in gold. They go back quite a long way. You can see there.
Mm-hmm.
Uh, that's quite a long trend line, and we just broke through it. So I was like, okay, this is it. So right now we're coming back to retest, and maybe
Mm-hmm.
we'll break through again and go higher. I don't know, but I've got to now wait to see what happens before I can get back in, if that makes sense.
Yeah, that's great.
um,
That's what we
but yeah,
want. Yeah,
that's what's going on with that. So at
yeah,
the moment, one small red trade. It's the way to start the day. It is what it is.
yeah, yeah.
From, from,
Exactly. It is what it is. Yeah.
it is what it is.
I just always say to people, watch the London Open or that kind of Eurex, sort of a Eurex Open, because it can bring this reversal. I've been
Yeah,
aware of that behavior ever since I was even a swing trader. And unless you're like really quite heavily in profit, usually those squiggles for the next session open can be pretty scary. And in gold, because it's so liquid, unfortunately, it can actually erase even 100 tick profit. Because these
yeah,
days on gold, what is that? Nothing. They just go
yeah. Well, this is it.
and it's gone.
I
So,
think somebody in Hoops Discord last night asked me how wide a stop I like to use in gold, and I was like, well, usually it's a 50 tick stop, but
mhm,
it's 2 times ATR. And when you look at two
yeah,
times ATR, and you're like, right, okay, that's 100 tick stop. Okay,
yeah,
fine. then size down. It doesn't mean that's not the right stage. It's like 100 tick stop. Yeah, that's what it needs. It's gold.
That's what it needs. Yeah,
So
I agree. Yeah, that's how I approach my stops as well. Because people always criticize me. They're like, "D, why do you use 45, 50 tick stop?" It's like, it's because my average session ranges are telling me that is the kind of volatility that we're working with. And it's like, I can't use a 10 tick stop when that's not going to last for a nanosecond. And then I'm not going to be giving it the right amount of time for the trade to do what it needs to do. Therefore, I prefer to use sort of these wider stops that enable me to catch a bigger piece of the pie, so to speak. So yeah, I like that approach. And I do like the coach pause 2 times ATR as well. I have my own way. So I look at the previous 10 days of average session range and I divide that by a certain number just to make sure that I have enough space to do my sort of 2R trades and stuff. So, and then I can decide whether I'm going to take it off at 1.5, 1.7, 1-to-1. You know, you have options.
Yeah, absolutely. But yeah, I think in the early days when I first started doing this, it was like, okay, it's all about risk management. It's all about risk management. You get this, everyone tells you it's all about risk management. Great. I'm going to take this trade with a 5 tick stop.
Yeah.
Because I'm not risking more than $2, you know.
Yeah.
Like, come on, you're
there is a you know, the opposite side to that, where people think that risk management is using the smallest stop possible. I had someone on Twitter DMing me a while back. They were like, I'm always right on direction, but it's never reaching my like, it's not in long enough. And I said, well, what sort of stops are you using? And I think they were using like something like 2 or 3 points. So like, I don't know, maybe about 6 ticks on ES. And it was in and around about the time of the madness happening. You know, all the Trump tariffs were coming out. So I was like, well, why are you using such a small stop? Like, even in normal volatility, I usually use anywhere between sort of 8 to 10 points. So that's like, you know, 24 to 36 ticks. And I said, try, if you're right on direction, try and widen that stop. Give it time. And then they went away, you know, didn't hear anything for about a couple of weeks. And they come back and they're like, oh my God, it's working. It was like, well, duh.
Oh, no.
You know, so sometimes that one little change can be the difference between your trade working out and you constantly getting stopped out and thinking, oh my God, I'm so bad at this. What's going on? It's literally just a system design thing where your stop losses are not appropriate for the current volatility. And I'm generally against tiny stop losses unless you're like a hyper scalper or something. And you know me and scalping. Every time I hear someone who's been trading for, you know, I ask people usually, how long have you been trading for? And they go, I've been trading for, a year. And I'm like, great. So how many trades do you do? Well, I do 50 to 100 trades a day. And I'm like, why? Yeah. Why would be the first question. And then the second question will be, you know, are you like not looking at the levels? Are you jumping in and out? And then I see them, like, for example, yesterday, it's a nice trending day generally on NQ, a bit of tug of war, you know, in the beginning. We opened inside value. It took a while to exit that value. But then once it went into sustained auction, we had like a clean slate up to like 380. And I know that there were people out there trying to scalp the trending moves. It's like, why don't you just stay in? It's like, why are you spending commission fees? And, you know, you're doing so much jumping in and out instead of just running it to the next orientation point, next danger zone, which was 380 at that time. And for sure, it actually consolidated around that area. But, you know, it's like you have to match your strategy to the type of a day. If it's definitely range bound after like 2-3 hours, we have not left really neither the value nor the initial balance, then scalp away, you know, go tops, bottoms, go down to 5-minute chart, go nuts. But in a trending day, I just really don't see the point of scalping. I really don't.
I think we're our own worst enemies, and we make life too difficult for ourselves. You know, it's so much easier to get into, you know, an urgency breakout. When I see an urgency breakout, I put that order in and I set a decent size stop and then just leave it alone.
Leave it alone. Yeah. I also had a question from someone. How do I manage my trades better? And I was like, well, what's your problem? Well, I get knocked out very quickly. And I'm like, okay. Have you tried not managing your position? That's like the first question. And there are things where we try to do too many things because you feel like you have to work for your money. But trading is one of those activities where you probably are better off just not messing around with things, especially if you're looking for a slightly bigger trade, like maybe a mean reversion. Sure, you can look at it when you first enter just to make sure you get some kind of movement away from it. And if not, then kill the trade and get on with your life. But generally, people are in a trending move and they're like, "Where's it going to reverse? Where's it going to?" Yeah, it might, but there are certain parts of the day, like I said, the London Open and Eurex are definitely one area to look out for. After that, it's really nothing up until the overlap, so the midday our time. And then after that, depending on what you're trading, watch out for post and white cut, which is after 3 p.m. That's 9 a.m. Central into the Euro close. So you've got this 90-minute time frame when I actually have my highest probability trades for reversals to actually play out. So I can run over my crude oil trade that I was stalking in the morning. Oops, what the hell is that? I just did something here, and it keeps doing things. Like, stop. Okay, there we go. One day I will learn how to use drawing tools in this platform. But let's have a look at crude oil. So yesterday, in the morning, I was stalking this 66, 25 area to break down. And we wagged around it for quite a long while. However, my actual trade, so this was London, my actual trade setup didn't appear until 3 p.m. So at that point, I saw this little wick going on, and I do like to look at tape. Apparently I'm on the wrong microphone. Right. Okay, hold on. Let me just change that quickly. Oh, can I change that? I'm not sure I can change that. I was messing around with the camera yesterday, and I think it's picking up my camera, so technically I don't need this now. Yeah, well, there's nothing I can do right now because I think it's going to stop. Yeah, so we're just going to have to go with the echoey.
It sounds all right for mine.
I think this one is more directional and less echoey. The camera one is picking up the entire room. It's not exactly treated. I have a couple of ghost panels here and there, but So anyways, let's get back. We're just going to have to push through it. I was looking at 66.25 to basically break down because that was where the core resistance and the gamma wall was. But like I said, most of my setups on crude oil and gold do not really come in until much, much later in the day because of that post and white cut reversal. So what is it? It's a Forex option expiry, actually, and it happens every single day, 10 a.m. New York time. That's 3 p.m. over here. So once the options go through, just like any other...
Dee, what did you say that's called again?
I call it the post and white cut because it's called white cut.
Okay.
Which stands for option expiry, and it happens in Forex options. Now, most commodities have some sort of a link with Forex products. So crude oil has a big link with the Canadian dollar.
Yeah.
Gold has a big link with Australian dollar.
Yeah.
Equities can have a bit of a correlation with yen, not every single day, but those yen option expiries also can have a big effect on equities. So if you're going to look for any sort of reversals, that is a time or day when you have the highest probability of that reversal happening. So this is why in London, I've always kind of struggled, apart from that Frankie fake out, I've always kind of struggled to find setups that are appearing to a frequency of like over 60 to 70%. Because we don't have that. We just have Frankie fake out, London Open, and then that's pretty much it up until, later on. And you have to look at the markets as a structured environment, because I know people think it's random, and yes, anything can happen, but for the most part, on most days, if it's not an outlier day with some sort of a catalyst, you will get these like structured moves at very specific points of the day, and they will either be based because there's another session opening or closing, or you have an option expiring. That's it. So if you can pinpoint the times of day when you see something happening over and over, that's a strategy. That's the beginning of the strategy, or you can include it in your existing strategies. Just a little bit of awareness of time of day. It's also why I say time of day is a level, because if the time of day is wrong and yet you're reaching the level, classic example being reaching the exhaustion of the average daily range on the day, which also in Mentor Q, very similar level is the 1 day max and 1 day min, because that's what they look for. They look for implied volatility. I look for a similar number, but it's calculated differently. It's not calculated based on the option volatility. It's effectively calculated by the previous 10 to 40 day movement, and that is just an average of that. So when you arrive there too early, it's like, okay, well, why is this arriving into the complete exhaustion of the day in the first hour of London? Or first, like, that's too early, right? So to me, that would imply, like on gold in particular, especially if we overshot it and ignored the level completely, that would be, for me, maybe we have an outlier day. If it reacts from it, it just means that one of the sessions was a little bit more lively than it should have been, but the level still worked. So it carries not just, oh, hey, we have a level, let's just do reversal, do or die. How does the price behave around that? And how can we derive some information from it that can help our trading? So with me, time of day, so 3 p.m. my time, 9 a.m. Central, all the way into the Euro close, I generally look for reversals. So that's what my crude oil trades were. And I actually scalped it a little bit. Let me just see if I can maybe do charts and data here. So executions. So I did, obviously this was the London ones that you guys saw me do. One of them was a scratch. Can't remember what the other one was, but this one was the prime time of day when the short came in. So I snuck that. I then also did a long from value high, because we hit the value high. This was previous days value high. Yeah. So as you can see, did a little bounce from there. Then we went back to the initial bounce low. So I actually saw that, and I thought to myself, "Oh, should I go in?" So I actually did that on another, because I thought I did enough trading on this one. So let me just go into maybe another account and try another short. So it was a beautiful day of post and cut reversal, mean reversion to value, value high bounce back to initial bounce low, reversal, and then just a bleed through the whole value as a value acceptance, but you wouldn't have had the time to do it. And then finally lunchtime hit, and we had yet another reversal. I don't take these because it's too early. I would like this reversal to happen closer to settlement, which didn't happen since we bled through the value area as a value acceptance, which minimizes the probabilities of reversals lasting. For some reason, value acceptance days, they're just going to keep going. But yeah, it was a very, very nice, lively NYMEX session. I'm happy to see crude oil.
Can I just say, Dee, that's a masterclass right there. That is top draw trading. Congrats on.
Well,
and I would say to anybody that's watching this, that when this session ends, go back and watch that 3 or 4 times. Really soak up what Dee's just said, because there was a lot of really cool information there. But yeah, well done, mate.
Thank you. I've traded crude oil for 12 years. So obviously with me, when crude oil stopped moving, that was a huge problem for me, because I have so much experience watching crude oil live, breathe, and I know it to the core, especially for the NYMEX part of things. I can
Right.
literally tell you how things are going to play out, and I've done that even for lunchbox trading. When somebody enters a crude oil trade, and I'm like, you're doing failed auction now. Just know that the probability of it kind of fully going into full auction at this time of day is probably not great, and that's exactly what happens. Or somebody goes, oh, I want to do a reversal here, and I'm like, it's a trending day, it's Thursday. I think it's probably going to do a liquidity grab, and then it's going to reverse, but it's not going to be a massive reverse. It's going to be like 30 ticks or so, and that happened like to a T when I was on with Anne-Marie and Hogue, and she was like, "Oh my God, look at it! It's doing exactly what it is," and that's because I studied crude oil to infinity, like literally. And then it stopped moving on me. So I'm like, oh, great. Now I need something else. But when it's moving, I'm very able to kind of capture whatever's going on. I have my playbooks that I know are super high probability. So the post-democratic reversal being one, pre-open outside of value. Usually crude oil is going to jump to value first before it does anything else. And then, like on this day, textbook day, value high reversal. Not sustained because, again, hits the initial balance, then smashes back down. And again, it was a Tuesday. You have option expiries there for the CME. So we have bi-weekly crude oil options. Therefore, Tuesdays and Thursdays bring more probabilities about the trending day. So if you see a trend in one direction, it's probably going to keep going on Tuesdays and Thursdays for some strange reason. It's, unwinding of positions and all that. But yeah, so
it's
my name.
You've just made me. I've got a good question for you. Hopefully, we'll get time to cover that. But what you've said there about how well you've always said, in all the time I've known you, you've always said I traded crude for many years. I'm very experienced in it. Blah blah blah. And I've always taken that on board and thought, right, well that's great, but. And I did have a few successful crude trades, but more luck than judgment, if you know what I mean. It's like I don't understand that
mechanics.
So I decided it was you talking about crude that made me think 5 or 6 weeks ago. Right, I'm just going to stick, because I used to watch like 15 different markets. I look for the breakout trades. So the J, what Jay's always talking about at the buzzer. You look for VWAP to leave the range of the opening candle, and if VWAP goes, then that's your signature coin. Those trades work really well, really well. So I was doing that, and I was monitoring like 14, 15 different markets, looking for the one that would break. Then I'd take that one, and that was working for a while, and it still does work, but I felt after a while, and after many sessions of coming to your sessions here, that actually I don't really understand any of these markets. Yes, okay, I understand the setup, and I understand how to execute that setup, and that works. But I really want to know why it works. Do you know what I mean? And why this is working here. And so I decided, Dee's an expert in crude oil. Why don't I give myself, a few years trading one instrument? So I picked gold, and I can tell you that I've learned a lot more about gold, and I'm hoping, and this is what I'm trying to say, is that by just focusing on one thing, I get instant stats from the journaling and everything, because different markets behave differently. If I was in NQ, I'd be dead by now.
Same with me, mate. Yeah, same with me. I certainly wouldn't be here after 18 years. We're not looking like this either at 45. I would be like,
even greater than I am. Right. So it's like, so I'm sticking with gold and trying to sort of dig into an instrument. So that leads me on to my question. When you decide on a market to really dig into, what does that research look like for you, Dee? Because did you go through fundamentals of where the oil's actually coming from, what countries are, what OPEC role plays, etc., how big a deal is this, how big a deal is that? Did you actually put together a study guide, or did you just come to these things over a period of time? What's the story there?
That's a great question. Thank you for that. Yeah, so I did study not necessarily the process of deriving crude oil and how, the derivatives of crude oil and, all the stuff like heating oil and this. I read some books, I did, but the thing that made the biggest difference is knowing which countries are the biggest exporters of crude oil. So therefore, and how much chunk that comprises. So, for example, if you have somebody like Russia, they're probably about sixth on the list. You also have Iran. You also have countries such as Canada. They're also, I think, within the first 10 biggest crude oil exporters. But then on the flip side, you have the demand. So who has the highest demand for crude oil? And that's China. They comprise for 15% of world's demand. So one of the reasons why crude oil went negative during COVID was because China stopped travel. So we suddenly had a hole of 15% of crude oil demand was just vanished. And that's what created the disparity between whatever was going on with COVID, and then crude oil just went negative. And apparently, according to the Series 3 study guides, FINRA said, well, futures can never go negative. And they've obviously not updated those texts for a very long time. Yeah. And I'm like, really? Because 5 years ago, I was like, what are they talking about? Clearly it went negative. Like, who writes these things? So it can go negative, but it was a black swan event where literally 15% of world's demand vanished. And that was the fundamental part. I am still a little bit perplexed over inventories reports because they always seem to get it wrong. And they're not wrong just a little bit. They're wrong completely. I don't remember last time when the EIA report was actually on the money. And by the way, if you're trading natural gas, we have the report coming out today at 4 p.m. our time. That is 10 a.m. Central. So be careful. Don't be like in a natural gas position around by that time. I actually forgot because I went back to natural gas not too long ago. And I traded it quite a bit back in the day, and then I just moved away from it because I was doing really well on crude oil. I was doing really well on gold, and I was pretty happy there. But natural gas has been moving, so I was in a trade, and suddenly it just dropped through and I'm like, oh, what is this? So this looks newsy. And then I remembered, I was like, of course, it's not on Wednesdays, natural gas is on Thursdays, and things like that. So familiarizing yourself which releases can be very impactful. Now, from that point onwards, it really does matter that you understand some basics about the economy. How does crude oil relate to the interest rates? What happens in high interest rate environments, what happens in low interest rate environments, because there is a correlation, maybe not like day to day, but if you look at the crude oil in some of the low rate environments, it was going absolutely nuts. And, that's because it does have an inverse correlation to it. And, inflation and a whole bunch of other things that can impact it. So just like that basic fundamental side, you don't have to become an economist or anything, but just know what happens to your product at this kind of market state. And we have some very good studies now. We've had some very odd times all the way from the credit crunch onwards. So from 2008, you can go and study how extremely low rates were affecting your market. Was it if you're trading equities, did they have a quantitative easing program in place or not? So if somebody's printing money, obviously that is pumping fake sort of demand into the market, and it will just keep trickling. But what was interesting in equities is that it trickled in the tiniest portions. I look at people who are used to NASDAQ and ES moving quite a bit these days. But if you look at NASDAQ when I was looking at it in 2013, it was moving barely 75 points in the entire day, whereas ES was like 6 to maybe even 4 points per day on some days. So it was about 20 ticks for the entirety of the range. And it's like, well, really? It's an entirely different market. Entirely different market.
You just spurred off a whole train of thoughts in my brain, and the first thing that I came to is that, so for those that are thinking, well, how do we actually go and find out the effects of this, the effects of that? You've got things like Edgeful that will help with the market conditions, but it won't help with fundamentals like what happens when interest rate is high, how does that affect gold? But I know where I can get that information. It's called ChatGPT. It's a wonderful research tool for that.
Yeah.
You just ask the question and say, comparing futures markets since 2008, what impact has interest rate had on gold? You'll be amazed at the depth of information that's going to come out. And not all of it you can just take as read, right?
Yeah.
It's going to spew a load of stuff out. Some of it's going to be true, some of it's not going to be true, and you then have to dig a little further. But at least it gives you can check this out on this source. You can check this out from that source, And the CME website has got so much data in it.
Oh yeah. CME is great. I mean, I really love CME for various things. I like to look at the CVOL, which is basically the volatility for index for commodities. That's very helpful at times when we have market differences in volatility. So if something completely dries out, maybe look at the CVOL, or VIX if you are on equities, because not many people are on commodities. And you can find out the fundamentals very easily, not even with ChatGPT, but just with regular Google AI that they have now. Just ask it a question. It actually has an AI bot in there.
Yeah.
So it's not very hard to come by the information for the fundamentals. But once you have the basic understanding, it is then time to really dig into the playbooks and to have, I think, the systematic framework that's always the same, so that you can track your progress. And then as you start to get more information about how the market moves intraday, and that's nearly always done with a forward test. You just sit there, make notes. Observation should be the first point of anybody's development. Never mind trading actively. Observations, just to remove the emotions completely and just to have the reference points. Like, for example, on my charts, I have the, usually the value area, I usually mark off the initial balance, and then, you can just watch it. So let's see, the initial balance for Colmex, here we go, NYMEX, and then value area, and then how all of that behaves, right? Sometimes I will extend my rectangles just to see how the price is going to behave in and around there. And you can see that here, touched the initial balance and then came back. Tried to go into value high, but a lot of buyers stepped in. And, so you had effectively mean reversion down to value high, then an auction fade to the initial balance low, then the initial balance low reversal into a full value acceptance. And, if you were looking just for the value acceptance, I think that would have been a little bit late, because to me, the actual trade here was the joining the sustained auction from the initial balance low.
Yeah.
And sometimes the value acceptances, they can look a little less crazy than this. But then if we're going to really drill into it, you had another double dip value acceptance, because look, value high was touched, and then again another move down.
I quite often see a reversion all the way to POC, to point of control, and also to settlement. That comes in quite often in the course of the day, doesn't it? They're like magnets.
Settlement. Let me see. They are magnets. You're 100% right there. I do have settlement on my other chart, which is blue. So just see what I'm doing here. All right. So settlement yesterday. There it was. That's the blue line. So this was yesterday. I can actually easily just go back in time to see how things were working here. And the average daily range low was actually 65.08, not too far from the settlement. Yeah. And then it sort of just extended that, which happens during times of any kind of news events. And it shows you that it's now a single direction day as well. So it carries another piece of information inside it. Just having those references and then just really drilling deep into how the price is moving over time. So not just one day or 2 days or 5 days, but going to, for example, 1 week, 1 month, journaling all of that and
Yeah, yeah,
finding patterns. So it's
yeah,
like, this is what my journals used to look like. Time of day, let's say 3 p.m. Crude oil tried to exit the failed auction, then created a bearish engulfing on a 15-minute chart, but then it took a while and it retested initial balance high before continuing through to rotate through the entirety of the initial balance. So that would be one. And then the next entry would be 6 p.m. Starting to see a bit of a range forming. And do I have any levels? Oh, the ADR low is exhausted already. Let's see if we can get the bounce back into settlement. And then I would have some days when the bounce back wouldn't happen. And I'm like, what time of the week was it? Oh, it was a Thursday. Okay, so Thursdays, and you can derive these stats just by doing your own research. And after that, I became okay with Python. And then I started to code algorithms that I call them my counting algorithms. So I would give it a condition, and I would just say, well, how many times has this happened? And then what is the average movement, so average MFE that your setups, like let's say we have a setup like the initial balance reversal, initial balance low reversal. So you have to define the initial balance, obviously first hour of trading, and then you can tell it to count how many times you had the exit from the initial balance on a 30-minute chart, then a test of the initial balance low, followed by yet another reversal and an extension. So if you define those little conditions, then you can count how many times that's happened. And I actually used to have an algorithm, it's a mechanical trading system, of a breakout on initial balance, either high or low on crude oil, to basically just go, right, as a sustained move. And that worked swimmingly well up until I think about 2 years ago. And then I had to switch it off because obviously it started to show not such a great result. There was a lot of failures. And then I have another one that scans for the failed auction side of things. So, you as somebody who's a strategist, that's what I do, right? You switch on and off different pieces of algorithm that you have. You don't just run it all at the same time and hope for the best. But just having that experience to have the levels, and I know, Paul, you have your levels that are very well defined. Yeah. And all you need to do is just observe, make the note of price action, time of day, and see whether all of that keeps happening. It's the same process everywhere, and it's just time.
I think many people don't realize that, and they say it often on the main broadcast. We get paid for pressing buttons, and that's true. We do get paid for pressing buttons, but trading is just so much about doing the research, sitting there watching the market for hours without pressing any buttons is trading. That is the job. In the same way that if you think about a pilot, right? A pilot gets paid because he flies you from, London to Paris. No, he gets paid because of all the thousands of hours of practice he did before. He gets paid for the 2 hours of flight planning he does before the flight. He gets paid for understanding the weight on the flight and understanding all of the weight and balance and making sure the flight is going to be safe. He gets paid for doing all of the checks of the aircraft and everything else. Yeah. You just think you're paying him to get you from London to Paris. Think again. And when traders are thinking, when people look at traders online and they say, that guy just made £1,000 and all he did was press the buy button and then hit the sell button. No, you're missing the point. There is so much more to research. That is where the real money is made, is in digging down into these things, having confidence in your trading, building up that, so that so we talked about wide stops and small size, and that's where I'm at right now. But there are some trades where I will jump in with 2 mini contracts because we are right at a level, a setup that I've seen a dozen times before. I will set a very small stop on that because I'm in with 2 mini contracts because I fully expect to see a reversal from this point, and then it works. In the event it doesn't work, I lose $100, $200 because it was a small stop. but in the event it goes, I'm making 3, 4, 5, 6,000. And that is the time when you should size up, is when you know, you don't know, nobody ever knows, but you know you've got your risk management in place. Number one, you know that you've seen this set up a dozen times before. You've got years of experience in this game, and you can see exactly what is very, very likely to happen. Doesn't mean it's going to happen, but it's very, very likely to happen. That's the time when you can put in a full mini contract.
Well, if you add a little bit of real-time order flow, you can actually see it start to happen as well. So this is where another layer of
running over here, right?
Yeah,
I'm watching it all the time.
Yeah. So this is where the fancy stuff starts to come in. So yes, you can have a level, you can observe what's happening, but once you get to a point where you're no longer flustered about losing one trade and you have something that works over time, because like I always say, with more sample size and more time, chaos is introduced. So therefore, I see people who are like, oh, I've got 80% accuracy, and then you look at their report and it's like 80% accuracy over 2 weeks or 2 days in the worst cases. And I'm like, so what happens on all the other days? Like, where's your stats from the other? Oh no, I blew up. And I'm like, well, we need those stats too. That also counts to our accuracy. And they're like, oh no. And I, like last season of the VIP, I actually looked at all of these scalpers who were saying, I've got high accuracy. This is how I trade. They, like, apart from about 4 or 5 of them, they all had really low accuracy. We're talking low, much lower than mine, because I have positive risk reward. But so it was quite perplexing to me, because I have a positive risk reward, and then a lower win rate. But these guys were having 0.8, 0.4 R, and yet trying to trade with 20 and 30% accuracy, because I was making them go through the whole process without resets. So all of those Muppety moments went in. So I was like, that is not a system design. That's a problem with the system design.
Yeah, exactly. Yeah, exactly.
So chaos maybe exposes some parts of the traders' activities that they don't necessarily want to admit. And that's a problem. You have to be honest with yourself, and you have to roll with the punches, right? So this is where you stay in one account and you see exactly what you're doing in there over a month, 2, 3 months. And then you go, hold on a minute. So this is not sustainable over a long time. Well, sometimes you might find that you're an excellent trader and that you can sustain it. Very few people, but still it happens.
And you find things like a specific time of day is where I really suck. That comes from a long period of time. Something that Hoop said last night, which I think is worth mentioning here, is as we're talking about stats, a word of warning to everybody is now we're all on the new dashboard, and the new dashboard is great. You need to know that when you pass a combine, you will lose all of the stats. You keep the trades, so you can still export the trades, but you'll lose all of those stats if you haven't. So Hoop said last night, it's a good idea if you think, right, okay, I'm within probably 1 trade now of passing this combine. Export all your trades, write down all your stats before you pass the combine. Because the minute you pass the combine on the new dashboard, the account vanishes. It disappears.
Yeah.
Okay.
So external trading platforms.
They're pending, waiting for you to activate it to XFA. Then once you get it into XFA, you're starting with a fresh account. So you've again lost stats. So you need to export it before you pass, if that makes sense.
That's a very good point, Paul. Thank you for mentioning that. I know that we had a similar issue even on the old dashboard, where you effectively just have all the pretty analytics and then you pass it and it's just the analytics are no more. And we even
Yeah.
tried to share it and stuff, and it just wasn't really doing it. So I always have an external journaling platform. It's very nice that TopStep offers us to even have any analytics directly on the platform. You know, I love that. But you do need to, if you want to keep hold of or keep track of all of your trading through different combines, I would always suggest having an external platform where you can aggregate all of that data and then just track it over time, you know. So I also know that whilst it's a decent bird's eye view of how you're doing, I like to drill deeper. I like to look at MAE, MFE, hour of day, you know, things like that, where I can actually really drill into what's happened into a trade. And like you said, Paul, you mentioned hour of day. Very important metric. Very important metric, because many people are like, oh yeah, well, I just trade the open. And I'm like, okay, and which part of the open? Like, is it the first 15 minutes? 5 minutes, 30 minutes? Do you know, if you aggregate all your P&L, which part of that period is actually good for you? And in something like Edgewonk, I love Edgewonk, you can actually go down by 5 minutes and 15 minutes and really look at the time of day when your P&L is the most favorable.
Edgewonk, is that the journaling thing that you use? Because I've called Trader.
So you have many of them. You have Trades Ally, you have Trader, Trade Viz, Wiz, or whatever.
Trade
Loads of them, and most of them will have very similar features. But I like Edgewonk for the custom metrics. You can even track missed trades in there. So you know, if you miss a trade due to lack of confidence, you weren't sure, or whatever, you can actually put it in there, and it just tracks it like any other statistics. So it's pretty cool.
Thanks, mate. I'm writing that down, Edgewonk. I'll check that out. Just want to say a quick shout out to Shoe Balm, to Bruno, to Short Life Hacks, and all the regular guys that are in here that I chat to throughout the day. Thank you guys for being part of it. I really love talking to other traders. Otherwise, I bore the crap out of my other half. She doesn't appreciate it. So, thanks everyone. And just if there's any questions or anything, then you know.
It's so funny because you know I do like my husband was in banking. He's semi-retired now, but he was in banking and he worked in the front office of very, very big bank. I'm not gonna, dox him or anything, but so basically, he is a software architect. Like, he's not really a trader. He understands it to the core, probably better than I do, but he's just not interested. Like, if I try telling him, Powell was talking and, he was being really funny and they asked him about Grateful Dead, and he just turns around and goes, who? It's just like, and I'm like, the Fed chairman. Oh, is that what it's called now? Yeah. And so, I too get a lot out of the interaction with other traders. Now, obviously, a lot of the times it's just me here, but I do have chat. And after all this time, I do feel like I know quite a lot of you. Obviously, Paul, I met you in chat, and then we got to meet face-to-face on broadcast and stuff. I'm looking forward to the day when we have a coffee, actually, outside of the
I was going to say TV. That. You're not a million miles from me, Dee. We should arrange that. We should just
Yes. I would love that.
Yeah,
absolutely. But when I see the same names, I kind of almost know their personality now. Yeah. And it's very nice to see people, sharing their stories and, knowledge as well, because Short Life Hacks comes from an institutional background. It's amazing that we have such a nice community here. And the fact that Topstep has enabled us to share our knowledge and share our experiences, cry on each other's shoulders as well when things don't go right. That's amazing.
No, it is amazing. It is amazing.
All right, let's have a little checkup on the markets here. I'm just going to switch to my screen. Dee, the producer over here, so bear with me.
Yeah, so I don't have much going on at the moment because that trade caught me and took it, hit my stop, and now I've got to wait for another setup. And I'm only trading gold, and that's purely because I need to learn gold, right? So
That's
so
right.
whilst there's nothing happening in gold, there's not going to be a lot happening over here. So
Yeah. Well, let's see what's happening in gold then. Let me just drag it out. This chart as well. All right, so for now, I am seeing that London reversal that took you out. So that was this.
yeah,
Let's
yeah.
let's do a bit
That was
of
just because I stepped away from the computer at the wrong moment.
yeah. Yeah, I told you. So
Right.
I told you, London Open, don't go anywhere.
Don't go anywhere.
Yeah.
Yeah. Don't go anywhere. Yeah.
If you're gonna go after once you know there was yeah, exactly. But when London is opening, that is a danger time of day when things could
Sure.
happen like this, because there's usually some profit taking involved, whether it's profit taking or whether they're like, oh, we're too high up, let's just roll it over. It might be something to consider. Time of day is a level. Yeah, so that's what I mean when I say that.
The London Open is at 2 a.m. CT, right?
Yeah,
and that rejection happened at 3 a.m. So that was an hour into the London Open. But you're right.
It's anywhere from 7 a.m. all the way to 9:30 a.m. So you know how I'm starting.
Yeah.
So you know how I started these streams because we were talking about DAX trading. Well, one of my setups in DAX is to look for this thing. So it happens very frequently, right? And then we didn't get DAX. And gold sometimes does it, sometimes doesn't. And I'm not really awake before that time anyway. So I picked this time of day to effectively have my DAX setups. And then we didn't get DAX. So then Dee got stuck trying to see what she can trade. And frankly, I still haven't found anything that is that beneficial for this time of day, every single day almost, apart from DAX. So I still look at it and really, really hope that we get it at some point. But let's have a look at what happens. So I'm going to just do my analysis like I normally do. So here is now the initial balance for gold. We're touching the initial balance edge at the moment, and we already had a test of it inside it. And right now they seem to be getting back in on the trend. So there is a chance that this fails the auction and gets back up to the higher day. So that is definitely one choice. The other choice would be that we go and test. So let me just see what COMEX is. COMEX value high is actually closer than London. So let's just put that in because obviously a lot of people will be trading this later on. 3438.2 is the value high. So, I mean, we have some room to the downside. Let's do it like this. So that is COMEX value high.
Yeah, see, we're already way outside yesterday's entire range, aren't we? So,
which means maybe a gap fill could be on the cards post NY cut. Again, gold, just like crude oil, it does have those reversals. If you don't see a reversal in the first sort of 2 hours, then you can look for a continuation. But that will be the first step. 34.27.8 is low. I'm going to give everybody the quantitative extremes as well because they're very good orientation points. Now, according to MentorQ, the implied volatility to the top side was sitting around 34.70 ballpark, slightly below it. But I'm looking at my ADR high, and my ADR high is actually saying 34.75 to the upside.
Yep.
So it's a similar measure, but a little bit different. So what I usually do, I will look at it as a zone if they're that different. On some days, they are very similar, almost to the tick. But on other days, there is a little bit of a difference. So I like to take in both information and just look at it as a zone. Most of my areas are 30 to 50 ticks zones. So that's, pretty nice way to look at it. To the downside, ADR low is actually matching with the value low. So 34.27.3, so a little bit lower. But it would open up the possibility for the value acceptance for rotation down to the ADLO. It's another setup. So those would be my main sort of backbone strategy orientation points. And then anything else, GEX 1, 2, 3, calls, puts, they just serve to kind of tighten up those areas and maybe make them a little bit more accurate rather than completely invalidating them. So as it stands now, gold is rejecting the initial balance, it's having trouble. I would still wait to see whether, if I'm not watching tape, because obviously we're doing these streams, so I've got a lot of stuff going on.
Yeah.
But if I'm watching tape, not talking, not multitasking, trying to run a show and everything, I will be watching tape like a hawk to see whether we have stuff going on. Obviously, multitasking, as we demonstrated,
is not good.
Yeah. It's not good. It just takes your mind away. And the amount of times that I miss signals, and I'm not exactly a spring chicken. If I was maybe in my 20s and kind of my brain was working optimally, I could probably handle more multitasking. But these days, I've got to say, it's, Granny D is advancing very quickly. And it becomes slightly tricky to watch Bookmap and then try and talk and be funny at the same time and watch chat and, make sure that everything's displayed on the screen properly. And then I'm just like, oh, what was I doing? Oh, yeah.
Well, I'll tell you, it doesn't get any easier when you're 58, mate. So, do you know what I mean?
Yeah.
It's all going to happen.
Yeah.
My
husband's going to be nearly 60, so he tells me. So he also tells me it doesn't get any easier.
It doesn't get any easier. CVD, so the cumulative volume delta is just up and down. So it's like looking at Bookmap, there's really not a lot to judge from the order flow at this point. No. I've got my stats from Mem4Q on screen at the moment. I don't know if you can see all of that because our images are in the way. But if I maybe try and drag this up so that you can see some of these, or better still, I tell you what, there is a better way to do this. Let me just grab this.
Hold on. Let me change the screen layout. Let's change the screen layout to this.
Oh, there you go.
There we go.
So yeah, so this is what these are the figures that I'm kind of using down here. The core resistance, I pay a lot of attention to those levels, and then I mark them on my charts. I didn't really get a lot of time to do that this morning because I had to travel into the office and get myself set up for today's show. But those levels I keep a close eye on from Mem4Q, and I just say a shout out to those guys as well. And I've got no affiliate link or anything like that. This is just purely from my standpoint. Patrick does daily shows, and the information that he's partake to me has been really, really great. I've just joined in on some of those broadcasts as well, and it's like they don't, I always have to make a choice as to where my attention is going to be, but the guys at Mem4Q know their stuff. They've been around the block, and these levels are calculated for us. They've done just
to clarify, Patrick from Mem4Q.
Yeah, Patrick from Mem4Q.
It's Fabio is the guy that owns the company. Patrick is I think is either a partner, but he's one of the main traders and educators over there, and he's brilliant. I've been on him on the webinar with both of them. Patrick is really funny as well. So he's so funny, and he always kind of puts in like real life stories. So when Anne Marie and I were on one of the webinars, he was explaining the levels, and then we somehow got to, we asked him, how did you get into trading? And he said he was working, whether it was like in a shop or something, and then he tried to impress a lady there, and then he decided to kind of go into trading, and it just turned into this like really cute story of him trying to impress a woman. It's just like, that's so funny, man.
But anyway, I was just pointing out that this brings me on to a question. So I got a really good question. I think it's a good question. Let's see if anyone knows the answer in chat. But I know Dee will know the answer. So something that Patrick said was that when the gamma is positive, this positive gamma figure we've got right up here, it just says it's positive gamma. In a situation where there's positive gamma going on, the market makers are on the opposite side of where price is going. In other words, as price goes high, they're selling. As price goes low, they're buying. When gamma becomes negative, the market is in a very volatile state, and they are then adding to that volatility, because as the price is going up, it's going up at such a rate they are having to buy as well.
Yeah.
Have
So
I
the,
understood that correctly, Dee? Because I want to be sure that's not going to be false info. Have I understood what the
it's
market?
yes to a degree, but there is a little detail in there. So they will be taking the core opposite position of whatever the investor was doing. So if the investor is, let's say, they are long something, the market maker has to be short as a kind of to offset that and to remain delta neutral, but then they will actually actively buy and sell in order to maintain that neutrality. Now, if something starts to unwind and it starts to go insane, they also have to go along with that, which can amplify the move in that same direction. That's why you see that. So it's not just that they are, they're positive delta, so therefore they have to be negative or positive. They will actively buy and sell to generate liquidity, but to also maintain the neutral stance. So that's just a piece of information, but it's not going to be like, oh, it's positive gamma, therefore all of the levels we run into today are going to be positive, and it's going to be a long bounce from there because it's positive gamma. It can shift, it can change quite drastically. So I don't take too much stock into like whether it's a positive or negative gamma, because I know one piece of news, everything just changes in an instant. To me, that hasn't been super helpful. It's kind of helpful for general trends. It's like, are we in a positive or negative gamma? Great. But then everything from there onwards, it really requires some accuracy and situational awareness to figure out whether this particular level is going to act as an accelerator, because we've already had, something crazy going on, or whether it's going to actually act as a stopping point where, let's say we're in a positive gamma environment and it just got up a little bit too high too quickly for no reason. That's the point where the market makers will sell from the level, regardless of whether they're in a positive or negative gamma. It's just how,
well, that's great to put it into perspective, because it's like, what it's like when you're learning, as I definitely am. It's one of those, you learn something new, great, and then you try to fixate on that, and it's like, look, actually, guys, that might not be that big a deal. You don't really, price action.
It's an information. It's definitely information that we can take on, but it's not to be like, positive gamma, I'm only going long. Well, no, because there's times of day, where it's gone up too high. Like, let's say right now we're opening, gold is kind of hanging above that COMEX value. So let me change to my screen. And you're already seeing that there's a problem. They're not really succeeding going higher up. So therefore, that definitely opens up the possibility of going down, even though it's going to be positive gamma. So perhaps when we get down to maybe 3410 or 3400 again, you can look at that positive gamma kind of taking hold again. But it's not going to happen just at every single level that we run into. There is a mean reversion potential because the Asia took it a little bit too high up. In my opinion, they exhausted the entire implied volatility of the day. And to me, this would be more causes to look for that mean reversion. This is where the contrarian D is always working in the background. Is this a mean reversion?
Absolutely.
Yeah. So from that perspective, again, it's just a piece of information. But it's always going to be situational awareness. I think the mental cue is excellent for options, because with the options, you don't necessarily have to be super accurate, especially if you date the option a little bit further out. And then you have some time, if you're dating them, like, let's say 15 days out, you have time for the weekly chart to do whatever it's going to do without being ultra accurate. And also because it's a slightly option that's data slightly further out, the time decay doesn't have that much effect if you get that move within the next sort of 3 days or so. because the longer dated the option, the less time decay has effect on it in the
Yeah, you
near
see,
term.
that's the thing. I've never ever traded options, and
Mhm.
I mean, I know. I was going to say I know the difference between a put and a call, but I don't
Yeah,
really. I know one is one is buying and one is selling. Well, it's not even
yeah,
as simple as that, is it? It's
yeah.
so no. I have very little knowledge on options, but
Mhm.
what I do know is that the options levels are playing a big
They
role in
work.
futures,
Yeah,
right?
yeah,
So
yeah.
so
That's it.
and just understanding that sometimes you don't have to know absolutely everything. I don't need to understand options to understand how to trade around the options levels.
Yeah,
But one day I will take some time to understand options because the engineer in me says, yeah, but I've got to know how this works. You know what I mean?
yeah,
So,
yeah.
because then I'll have more confidence in it and blah, blah, blah. But
For
for me,
those who don't know much about Paul, Paul is an engineer, but he's also a private pilot. So he's already got like amazing set of skills outside of trading. This is why he was able to be quite systematic even at the beginning. So yeah, just wanted to put that out there just in case people are like, "Oh, engineer? Oh, okay." So I wanted to mention the pilot
yeah.
side of things as well.
Well, yeah, no, I mean, it does make you, being a pilot is all about increasing your capacity. It's one of the things
Yeah.
that in the early days, you really struggle with, and your instructor will do 80% of the flying, and then they offload more and more of the flight management to you as you grow and grow and grow until you're ready to pass your license. By that point, you've gained massively in mental capacity, so it helps with
Mhm.
this.
Yeah.
Um, but yeah, no, the other thing that I'm using a lot recently is the cumulative volume delta from
I
Bookmap,
am.
where
Yeah,
I'm
yeah.
using that is particularly is if CVD keeps going more and more negative throughout the day. It's more and more negative, 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 and price is just staying the same. It's moving within a range, but it's just staying the same. And then it goes negative 1,000, and then it's negative 1,500, then it's negative 2,000, it's negative 3,500. You see, tilt is 90% short, and it's like, right, this I'm long at that point because I
Yeah.
know any
That's
minute now
crazy.
all of that's going to get ripped out because
Yeah.
that's what's building, and so I've seen that set up.
This
That's
is
really
beautiful, beautiful setups. I actually did a long YM breakout. I think it was earlier in the week because of that. It was going up, but Delta kept being negative, and people on the main broker kept trying to short equities, and I'm like, no, it's gonna pop, man. It's gonna
it
pop.
is, yeah.
So I looked for an area where I could, justify a long. And we were already nearly at the high of day again, and then it kind of started to pull back a little bit. So I just went long, and it popped. So every time they sold it off, somebody came in long, and I was just, it literally stares you in the face, right? It's like
Yeah,
delta divergence
exactly.
is one of the most
It
beautiful
does.
setups that you can
Yeah,
ever have. Or
yeah.
if it's going with the direction, but then
Oh,
all of a sudden they shake it all out, and delta is like halfway or
yeah,
neutral, you
yeah.
know that I'm trying a short at that point if we've been
Yeah,
going
yeah, yeah,
long. Yeah,
absolutely. Because
it's
there's
a
a role.
beautiful tool.
It's a
Yeah.
chango. Yeah,
I
yeah.
know they're working on it on Topstep as well, so we are going to have
Well,
cumulative delta at some point.
yeah. I mean, it is. For those of you that don't, I don't know if we can do that and drag that in. Hopefully, you
Yeah,
can see that. There it is. That's all I have
yeah,
on it. I have it turned right down. So I don't have blobs everywhere, but I can see this CVD number and I can see where the large orders are sitting on the book. And right
yeah,
now, this says ain't a lot happening.
yeah,
Okay, that's what it says right now. And
yeah,
that's something that I will sit and just stare at. It's just on a monitor over there that's in the corner of my eye. And when I'm thinking, right, this level is here, this is there, that's now adding up, I'll then look and what's the CVD doing? What's the book saying? Where are the big orders? Where are those levels actually going to be? Like 3,500, you can see 71 lots up there at 3,500,
hmm,
right?
yeah,
So I'm aware of it. It doesn't mean I'm going to do anything about it. But when we get close to 3,500, I'm going to be getting out of a long if I'm in a long. It's just that sort of information. So that's Bookmap. It is expensive. I pay something like $89 a month for it,
yeah.
uh,
Same.
but it's more than paid for itself. I mean, it's just one of those things. It's like and when you first come to trading, you hear, oh, there's this great tool that does this for you. There's this great tool that does that for you. There's this, that. And you end up like a kid in a sweet shop buying too many subscriptions. And then you realize after a little while, actually, I don't need that. I don't need that. That's made no impact. And that's maybe something you have to go through. But what I would say to anybody that's coming into this new is just learn price action. Just don't worry about all of these extra tools. You've got to understand what the market does.
Basics,
the basics first, and then later you might want to look at Bookmap, and then later you might want to look at Edgeful to get some idea of how to put some playbooks together. Or the best advice is just, and this sounds like, look, I've got my branded t-shirt on, I've got my hat. This is the commercial. Right, the best way to learn how to be a trader is to stay on TopstepTV. Just keep coming back here, because they drop bombshells at you. You know, they give you information, there's little nuggets all day, and they're good. They're a good crowd, right? So
I mean, yesterday I had somebody over here who was like, "Oh yeah, you like Topstep furniture." It's like, no, mate, I'm with a company that started the whole business. And it's like, you can say what you want about Topstep, you can bash us, you can do what. That's not going to change the fact that Topstep was the first one. It was actually MP and Andre. They came up with the idea. I don't know why Dre doesn't talk about this a little bit more, but him and MP were in the prop trading industry, and they were like, what if we decide to make like a virtual prop trading firm, and we have remote people coming to try out for a funded account, just like we did in our firm. It would just all be online. It was like, so that's never going to change. They started the industry.
They started.
So it's like, whoever says to us, oh, Topstep is this, Topstep is that, say what you want. We are providing incredible amounts of content, whether you find it, educational or it's tradertainment. Obviously, on the main broadcast, it's more, let's click more buttons. Let's, try and find more.
Let's go.
Yes, let's go. TopstepTV, let's go. Yeah. So we all know that. Yes, there's definitely a TV aspect of it. Even when I was on Fast Markets, we were encouraged to trade more, which, I'll be honest, it didn't really do much for my own trading, because I don't trade that way. But I was encouraged to do a little bit more clickety-click. And I didn't like that, I'll be honest. So, which is why you don't really see me on Fast Markets these days.
I watch Hogue. It's one of the really great segments. This one is a must, obviously. Aaron, I've struggled with Aaron, and not. Aaron is a really, really lovely guy.
He's a great trader as well.
And he has a very clean chart structure and blah, blah, blah. But he talks me out of all of my winning trades every time I watch his show. And I'm sorry, I'm not going to be watching Aaron anymore. But it's not because he's not a good trader. He's an excellent trader. What he does works really well for him, but his methodology doesn't work for me. That's the conclusion I've come to. So that's fine.
So here's the thing, because I do watch Aaron when I'm getting ready in the morning.
Sure.
I think you have to see where he's coming from, right? So he's a guy he's a kind of trader who takes like 30 to 40 ticks. So he doesn't look for anything more. No. But if you are looking for a swing trade, that sort of analysis will take you out of your perfectly good swing trade. I mean, if I listen to, let's say, Eddie, and I like Eddie, he's doing well, by the way, for everybody asking. He had a minor stroke, but he's doing well. He's doing his creative side. He's in his workshop. He's just like, trying to heal and everything. So he's all right. He'll be back, but, he needs time. That's cool. So Eddie is a scalper, like through and through. So I will see something that's setting up for my longer term swing trade that I plan to keep for the next 2 hours. But Eddie will see just a little drop, and he will take his 10, 15 ticks, and he will be out. So if I was, talking to Eddie, and he would be like, oh, I'm out, and me looking for a bigger swing trade, if I don't have clearly defined areas and setups and price action that I want to see, I will be taken out of my swing trade because I'm listening to somebody with a slightly different style. So whenever you're listening to a trader, you have to take in their style into consideration.
100%.
Yeah,
and I didn't realize, to be honest, I didn't realize Aaron was looking for 30, 40 ticks on his trades. I've only watched his show like 2 or 3 times, but each time it's like, well, I'm in long and he's saying you need to go short here. And I'm like, you know what? I'm not 100% convinced in my long. I'm going to get out. It's a small profit. I'll be fine. And then that's going to rip up. And I'm going to why did Aaron want to go short? And it turns out he did go short and he made a load of money and then it ripped up. Right. And it's like,
so again, both analyses will be correct. It's just a different time frame in which two traders are looking to take profits. So whenever you're watching someone, just keep that in mind.
Just understand.
You have to get to know the trader pretty well to see what. And I've watched Aaron before as well because I've known about him for a long time. In fact, Aaron is moving to Europe, so we are going to have some streams together. Hopefully, at some point, we'll reach out to him. Because obviously his show is pretty early for me. I'm just not really I'm not conscious of that time. I'll be honest.
He's over here now as well, isn't he?
He is, I think he's going to Spain or somewhere.
He's in Spain, Madrid, I think.
But again, Spain is 1 hour later, so it's still a sensible time in the morning. When he was in Oz, I think he was starting to stream at something like 7 a.m. in the morning. I can't speak at 7 a.m. in the morning, let alone get ready for a camera and do a stream. Even though I go to bed earlier, I'm still a night owl at heart. I was a musician, session musician for 20 years, from 1994 all the way to 2014. I just did nighttime jobs. And then obviously I went into props, so I had to start getting up really early. And I can get up. Whether I'm functional is an entirely different problem. So even these 9:30s, if I can have a little bit of a later night, like 2, 3 a.m., I'm struggling to talk in the morning. I'm like, today I'm on Celsius because I woke up, couldn't really sleep last night, and the dogs woke me up. And I was like, oh God, I need to talk. I need some big guns today.
That Celsius, isn't that the one where they've packaged some with vodka in by mistake? Isn't that? I'm not sure if it was that one.
I can't taste any vodka. I think that was in the States.
They had 100,000 cans went out with vodka in by mistake or something.
I think I saw that. I think Rips was making fun of why he might, because he doesn't drink, and he's like, is that why I'm feeling very good? Yeah, apparently there was a mix up with the labels. Some of the vodka cocktails went out in Celsius labels. I don't think it's got vodka in it. If it does, so be it. But I'm so far not feeling particularly tipsy, even though it's Thursday, right? We can have a drink or two on a Thursday.
And I think the other thing about Topstep is you've got so many different segments now, and so many different things you can get out of it. So like the morning call, the pre-market open is a great show with JD and Hogue. And I think Jay's been doing it this week. Really great segment. I watched that Cell 59, by the way, is an audio alert. I don't know if you heard that on the broadcast, but that's an audio alert from Bookmap. So it's calling out audible orders above 50 lots. So that draws my attention to it, if you know what I mean. So
I switched those off because I had the core Stephen Hawking like sound. And then I wanted it to tell me about was it absorption indicator or another thing? And then it kept going, order, that's the order size.
So that's why I have it.
Wouldn't shut up. So I switched it off.
Well, that's why I've set the level so high. It's because now if I switch to GC, so now these are the mini contracts, you can see that Cell 59 is there. Again, I've got this set to 49. Filter anything below 49 lots for gold, right? In NQ, that would be ridiculously small. But for gold, that's a sensible order level I've found. It's like anything above 50 lots is actually going to make a difference, and not on its own, but you'll see like 5 of those go through. It'll say sell 50, sell 200, sell 200, sell 300, and then it's like, right, now I need to pay attention because now something's changing. But that one sell 50 didn't really make a lot of difference, right? But that's why I have that on. But it is just there as I say, I've set the threshold high, so it doesn't go off all day. I mean, that's something I realized about 3 weeks ago. Somebody was saying, "Oh, gold has got a bit quiet at the moment," and it was. There was a small period where we had next. And I said, "Yeah, you know what? My computer hasn't said anything for 2 weeks.
Yeah.
2 weeks, I haven't heard a single order go through, which means either that's broken or there's nothing going on." So I changed the level down to like 1, and it started saying sell 5, sell 10, and I was like, "No, it's still working. I'll put it back up to 50."
It's just quiet. It's August. You know, I did warn people that in July and August we can have decent years, but you never know which one. However, after watching the markets for 18 years, I've had more quieter summers than the livelier ones. Let's just put it that way. So, you know, which one this year? I think June was pretty decent. In fact, March, April, May, and June were pretty good for me. July, I've struggled, very patchy for me. But, you know, August, maybe with some tariffs talk and, you know, this Russia and Ukraine issue, we could get a bit more action. But I'm still going to err on the side of looking for very small size setups and not full porting it. And
that's where I'm at right now. I'm not trading the minis anymore. It's like right now I'm in micros. I'm going to switch this back real quick. I'm in micros because I need to, because it's just not, there's just not enough there, you know. But that said, you know, I was up 250 or 220, I think I saw this long, because I took the breakout down here, and I was up here when I came in, saw it, I thought, oh good, it's working my way. The stop, I'll move the stop, make sure that's nice, and then I went and I went to the loo basically, and by the time I came back, it was like, oh, it's hit my stop. You know,
London open, so that 7 a.m. to 9:30 danger zone for
I wrote it down, mate. I wrote it down.
And different parts of the year. Different parts of the year will have different times when that happens, but that's the time frame. Sometimes it keeps happening right after Tokyo closes into Eurex Open. So they just smash through whatever was going on in Asia and then come back. Other times it's going to happen for like London for about like 3, 4, 5, 6 months. London reversals, London, like 8 a.m. strikes, and it just kind of turns around in a second. And then sometimes it's going to be a little later in the session, which is what we have now, probably because people are kind of waking up and they're like, we're a bit too high up. Okay, maybe sell. And to me, these are like take profit moves, but they are also mean reversion moves, if that makes sense.
Yeah, it does. It makes a lot of sense. I think I think hopefully people are enjoying this today, but it occurred to me, I saw some people last night in Hoop, because Hoop said something about you guys need to do the casting call. You need to get yourself on TopstepTV. And I know a lot of people are quite camera shy or whatever. But actually, this is you want to put yourself in my seat right now. I'm sitting here with one of the top coaches at Topstep, and I'm able to ask Dee direct questions and get direct answers. And that's something that, you know, you'd have to pay a lot of money for. Or just come on a program and then you get to ask what you want. You know, it's just putting that out there. I think a lot of people shy away because they think they don't know enough about the market. There go the dogs. They think they don't know enough about the markets. But the reality is we are all here as students of the market. We're all here to learn from these coaches. And one of the best ways to get some one-on-one time with a coach is to come on Topstep TV. I'm just saying, it's how it's. And don't feel that you need to be, you know, you can be real early in your journey, and then your questions are going to be different. But there's going to be a whole bunch of the audience out there that's also early in the journey and really want to know the answers to those questions that you're asking. You know, maybe some of the questions I've asked today have turned some people off because they don't understand what we're talking about. And that's just because I've been doing this a bunch of time. Right? I've been doing this more than 7 years, so that's why I've got the questions that I've got. But I think people are shy of coming on these things because they feel they don't know enough. And the fact is, it's not about how much I know. It's about how much Dee knows and extracting that information that's going to help me with my trading for free.
For free, exactly. We were encouraged to try and get people to obviously come on and talk. You're very right. A lot of people are shy. One thing that I've noticed whenever we invite someone, the very first, like, bless them, they don't want to be super honest, right? So they come on and we're like, hey, how's it going? And even though they've done like pretty well in their XFAs for like, I don't know, 2 months, 3 months, but now they're hitting a bit of a rough patch, they all feel the need to tell everybody how, oh, the last week has not been going that well. It's like, that's fine, but overall, like, you're still,
Yeah,
still
overall,
doing well.
Yeah.
It's like, it's so funny. But yeah.
No, you're right. You're right. People do that. And I think, and I think the other thing is what I've always noticed is that if I'm going to have a run of red trades, it's going to be 2 days before I'm going on TopstepTV.
Always. Yes. I find the same thing.
That's just how it is. And I've got to accept that. It's fine.
I would have the smashing Monday, and then on Tuesday, usually my Tuesdays are not that great. But yeah, I would have like not such a great Tuesday. And then I would come on Lunchbox and they're like, Dee, how's your trading going? And I was like, well, yesterday was great. Why can't we do this on a Monday? Yeah. And it was so funny. I don't know what it is. I think it's maybe a bit of the pressure of being, on air.
You can't imagine how good it felt for me to pull up my chart, see that the trade that I was in with my stop, I had a $200 risk on the trade. And I saw it up and I was like, oh, look at that. I'm in an XFA and I'm up $200 with first trade of the day. Great. I'll just move the stop to 75 because we're well in there. And then I just walked away from the thing. And then by the time I came back, it's like, oh, hello, it's hit the stop. That's so depressing. It's like just going to look good, but it's not about looking good.
It's not about
It's not. And this one trade is nothing compared to, the money that we're making on a weekly basis.
Yeah.
And that's something else. It's like focusing on the P&L on the day. I learned the other day that's a really, really bad thing. And reality is I've started now looking at my P&L on a rolling 90-day period. Nice. Because that tells me something. If this 90 days is improved against the 90 days before, then I'm heading in the right direction. And I'm heading in the right direction, folks. I'm happy. But it is an added pressure when you come on here. And don't ever be, if you do come on, don't feel you have to take a trade. You really, that's not what we're here for.
So unfortunately with us, we are here all the time, right? We have to trade all the time.
Yes,
not that you have to, but every time you don't, people are like, less talking, more trading. It's like, well, there's nothing going on. I can't just keep smashing trades in for chat because there's nothing going on. It's like my setups are not that, right? But people don't want to see that. So then they accuse us of talking too much and not trading enough and being dull and whatever. And this is why I have my props. I have the grasshopper hat. I have Pete the process parrot. He hasn't been out for a while, so maybe we'll drag him out one of the times. And I try to keep it fairly interesting, educational, even when we don't have a clear setup. But I will be honest, I'm very guilty of going into subpar setups for the sake of seeing something on the screen. I am guilty of that, right? Because it is added pressure, because people want to see you click. They want to, have some kind of ideas. But the reality is we cannot control when the setups are going to appear. I would love them to appear at this time of day, but the reality is that most of my setups on these types of trades, when copper is not particularly moving that well, or it's very, very quiet. So on some days, then goes crazy. On other days, that's not consistent enough for me, the way I do things. So I have to wait for the right time of day for my crude oil, golds, my setups that I've been trading for like 13 years now to actually appear. So it's like, I'm sorry, but You know,
Yeah,
uh,
yeah, but you
it's
know
just
what?
how it is.
It is. It is. It's how it is, and I
Yeah,
think, yeah. Hopefully, this
we
isn't too dull for everybody.
yeah,
Sitting here
we can't
with no
control.
trades.
We can't control when the setups
You
are
can't.
there, right? We
You
can't.
can't.
And I think it's good that we talked a little bit about bookmap. We talked a little bit about about mental queue, about the options chain, and how all of that stuff works really. We talked about the fundamentals, so I think it was still like a very uh, useful session for informational purposes. Maybe not tradertainment because we haven't really done
No, definitely
trading.
not tradertainment. No.
Um, but today, Thursday, I want to see what happens a little bit later. I'm pretty sure we got some stuff coming out that might bring a little bit of oomph
Well,
into
we've got
price
jobless
action.
claims coming up, haven't we? That's at 7 a.m. market time. I think 7:30.
Yeah,
Jobless claims.
yeah. Now we have Bank of England or BOE monetary policy report, and UK is doing the rate decision today at midday our time.
Great statement, mate. Yeah, that's
Yeah,
a big one, isn't it?
that could impact gold, for
Yeah,
example.
yeah.
So I don't really want to be trading in and around that. I want to trade after all that
I
is
was
out
going to
of the
say I,
way.
I won't be trading from about 12 till 4 today because I've got a
Yeah,
couple of things I've got to go and do. But yeah, I wouldn't want to be in a position when that's going on anyway. So
no, because
that's all.
gold does look at European Union, UK,
Yeah,
not as much as the Fed rate decision, but it could get a little bit jittery, and it could take you out of positions unnecessarily. So for me, the plan today is to basically stay out until my sort of day trading time zone when I know my probabilities are the highest. That's 3 p.m. over here, post 9 a.m. Central. And yeah, so it's going to be an interesting end of the week. But yeah, it's August, so we can't expect.
that's it. Yeah, it's August.
Yeah,
Yeah, we can't
yeah,
expect
it's August. Just
can't
stay
expect weather.
alive. Stay
Yeah,
alive for August. Let's just put it that way.
yeah, yeah.
All right, guys, that's it for today. Paul, thank you so much for joining me. It's been awesome catching up with you. Do you have
Thanks.
any wise words for our trades going forward? Do you have any plans maybe for the summer? Are you going on a vacation,
Well,
as our American friends say?
yeah, no, sadly, I've got a lot of work going on at home because we've just moved in and we've got
Yeah.
work going on. So there's a lot going on there. So I won't be
So
having
you're
any
staying
holiday.
in the UK.
Yeah, staying in the UK
Yeah,
100%. The only advice I would give to people is Dee says it time and time again, size down, slow down, particularly in August, guys. This is really a time where you can spend, if there's not a lot happening in the markets, maybe start looking at new setups or whatever, but don't expect that those new setups are going to play out particularly well in August because you're just not going to have the stats. But you can do some study, do what Dee's been talking about today. Dig into any market that you want to learn and stuff like that. Just because we're not clicking buttons doesn't mean we're not trading. We are trading. uh,
absolutely. Yeah.
that's all I can say to that.
Very wise words there, Paul. Thank you so much.
Cheers,
This
mate.
has been Paul H. I'm Marcus Stalker D. This was the Euro Trade on Topstep TV, and we will see you very soon. Take care.
Thanks, everyone.